The business world now has electricity. The legality of XRP ETFs is now evident. This significant historical event ushers in a new age for institutional investing in digital assets. BlackRock and other large asset managers can now begin providing spot XRP ETFs, and the market's initial reaction has been nothing short of spectacular. According to insiders, in just 7 days, more than $30 billion has rushed into these new ETFs, producing a price bubble that propelled XRP straight from its previous trading level to what is thousands. It's not merely conjecture or hyperbole. It is an unprecedented planned structural response to a convergence of demand forces. ETFs have previously driven up the price of Ethereum and Bitcoin. However, XRP's combination of scalability, real-world utility, and institutional compliance strengthens the initial demand shock. Banks, hedge funds, and large trading organizations are in a race to acquire XRP for use in transactions and settlements in addition to their portfolios. Thus, a perfect storm has resulted from the adoption of these ETFs. The asset is now more than just a means of international money transfers. Additionally, it is a regulated instrument that can be utilized simultaneously in reserves, portfolios, and settlement procedures. It's just astounding how much money is flowing in. Apart from the significant Bitcoin ETF launches, there was no possibility that $30 billion could have been made in the cryptocurrency markets in just 7 days. However, XRP's architecture and utility enable it to receive that type of money with a level of efficiency that is difficult for other things to match. In addition to the financial benefits, institutional gamers, but for commercial purposes, they must also retain XRP. ETF exposure ultimately serves as both an investment vehicle and a tactical fallback as more and more international institutions employ Riplet and on-demand liquidity to transfer funds across borders. Market participants are referring to this as a liquidity tsunami. Each $1 billion purchase contributes to the rising trend. Price hikes generate a sense of urgency, which generates even more revenue, creating a feedback loop. Market watchers claim that this quick increase from $1,000 within 7 days of the ETF's approval is just unprecedented. It demonstrates XRP's practical utility, something that Bitcoin and Ethereum were unable to do. This event is very unique when compared to the launch of Bitcoin and Ethereum ETFs in the past. Bitcoin and Ethereum prices increased more slowly once ETFs were authorized. However, the amount and pace of the desire for XRP are different. Financial entities such as banks are not merely speculating about the future. To ensure there is sufficient money and to complete transactions, they must have XRP. Industry insiders claim that a number of significant causes are to blame for this enormous spike. First, the ETF certification clarifies the regulations, allowing billions of dollars in institutional capital that had previously been reticent to enter the market in a safe manner. Second, because of the way ETFs are structured, it is feasible to purchase XRP without FEV-on-chain's liquidity, allowing large sums of money to be invested without compromising market stability. Third, each unit of XP purchased for ETF exposure is immediately seen as a crucial operational asset because Ripple continues to collaborate with banks and payment processors. Because of this, supply and demand even more tight. The 1,000 price target that will be reached in 7 days, according to many sources, is not a hunch. It illustrates the immediate structural imbalance brought on by incoming funds, utility-driven demand, and a limited supply that is exchangeable. According to analysts, XRP's liquidity and market value have consistently been robust enough to manage flows of billions of dollars. ETF approval and utility-based demand, however, provide a speed that hasn't been observed in other cryptocurrency markets. The parabolic move was done by perfect storm, by traders since it occurred during a period when the rules were unambiguous. Institutions began utilizing the technology, which was required for commercial purposes. Every major fund manager and exchange custodian is racing to acquire XRP. To be honest, the ETF's launch is further tightening the already precarious supply and demand situation. The significance of Wall Street cannot be overstated. XRP is now a valid trading option thanks to BlackRock, Vanguard, and other leading asset managers. The initial $30 billion infusion is only the beginning. People with knowledge of the situation cite plans by banks, hedge funds, and national wealth institutions to increase their contributions. To maintain operational compliance, liquidity coverage, and ETF exposure, each participant needs to purchase XRP in real time. The parabolic curve is accelerated by this coordinated acceptance. There are some intriguing parallels between this market event and previous ones, according to analysts. But even if previous ETFs have occasionally resulted in very quick inflows, XRP's operational usefulness, regulatory approval, and that extremely concentrated first allocation are all causing a market shock. In terms of size and speed, that is just unrivaled. We can see more from these market shifts than just the spike in numbers. Additionally, they are demonstrating more profound impacts on the entire crypto landscape. It is significant because XRP is now seen as the conduit between fiat currency and digital assets, a portion of an asset utilized in banking, liquidity management, and cross-border settlement is now available to investors in exchange, traded fund ETFs. By now, it's more than mere conjecture. The global financial system is a significant concern. Network effects are accelerated by this acceptance, according to some observers. Banks must retain more tokens in order to facilitate transactions because ETFs encourage more individuals to purchase XRP. Because of this, there is less in circulation, which raises prices. The market experienced an epic liquidity in a span of only 7 days. XRP's status as a financial and operational cornerstone is being cemented by the billions of dollars that were previously resolved through conventional currency methods. This event's size and pace also demonstrate how well major players may prepare in advance rather than waiting for a slow. The largest banks and asset managers immediately moved after regulators granted the all clear, whether it was due to a speculative hype or uptake. To increase revenue and enhance operations, they employed well thought-out allocation tactics in order to ensure a smooth transition to XRP exposure. Internal memos from major banks that were made public discuss these well-thought-out acquisitions, smart contract connections for controlling liquidity, and coordination across EDF and operational channels. These adjustments, together with strategies for profiting from the market, caused XRP to experience a dramatic parabolic rise that saw it surpass 1,000 in just 7 days. According to analysts, the way on-chain liquidity requirements and ETF inflows interact results in a feedback that is quite intense. The ETF launches for Ethereum and Bitcoin never truly went through this. The fact that XRP combines well-defined regulations, broad institutional acceptance, and the necessity to do business only serves to highlight how special it is. The 1,000 milestone is more than just a price. To be honest, it's a sign of transformation. The first week of ETF inflows demonstrated investor XRP as a fundamental financial tool capable of managing billions of dollars in real-time trading. Currently, asset managers, banks, and XRP is viewed as more than just a cryptocurrency by trading teams. It is a crucial regulated asset that they cannot live without. According to insiders, the structural necessity for XRP in banking operations, along with the speed of demand from ETF-driven capital, may very well continue to ticket price activity in the weeks following the initial clearance. Market analysts claim that although volatility is typical, the fundamental backing for XRP has altered in a way that cannot be reversed. It is no longer merely a means of speculation. These days, it plays a significant role in both large portfolios and the infrastructure for international resolution. You are already aware that the consequences extend beyond money. They have an impact on rules and operations as well. Other institutional-grade products, such as derivatives, futures, and corporate tree instruments, might follow once XRP ETFs are permitted. This will further accelerate adoption. XRP reserves are already being added by banks to their balance sheets, liquidity coverage ratios, and international payment networks. This demonstrates that the 100,000 price level represents a genuine shift in the value as far as not merely hype. Consequently, as well, that the initial shock lasted for the first 7 days, but the market will